those things like revaluing gold coming back into our monetary system, auditing Fort Knox, those were like, you know, topics that were only discussed in the gold scene, yeah. But now they are becoming, you know, mainstream topics, and this is quite important because it's telling me that gold is really, as I've said before, we're on the main stage now. Yeah. So as the famous blogger, you know, another and friend of another, you know, those kind of secretive bloggers, he said, you only need one gold revaluation in your lifetime. And I think it could happen. And then we're not going to talk about 3,200 or 3,500. We're talking completely different numbers.
China's gold imports through Hong Kong surged in April, nearly tripling from the previous month. According to data released by the Hong Kong Census and Statistics Department, net imports reached 43,462 metric tons, a significant increase from the 4,889 metric tons recorded in March. Total imports, including re-exports, surged to 58.61 metric tons, representing a 178.17% increase and marking the highest level in over a year. This sharp rise aligns with the broader trend of central banks, particularly in the East, increasing their gold accumulation. Ronald-Peter Stöferle of Incrementum, AG, notes that China is likely holding more gold than it officially reports, not to manipulate prices but to narrow the gap with Western central banks. According to Stöferle, gold is increasingly being viewed as a geopolitical asset, a prerequisite for global influence, and an unspoken requirement for a more prominent seat at the international economic table. One of the key shifts underscored by Stöferle is the growing emphasis on gold repatriation. More countries are moving their reserves back within their borders, a move that signals the renewed strategic importance of physical gold in national policy. This behavior reflects not only concern over global financial stability, but also a broader trend toward de-dollarization among emerging economies. Gold has dramatically outperformed other metals this year, which paradoxically may be a worrying signal for the broader economy. Typically seen as a haven during times of uncertainty, gold's meteoric rise, up nearly 40% year-over-year, has been fueled by a confluence of factors: aggressive central bank purchases, persistent inflation fears, and mounting political uncertainty in the United States. The momentum has been sustained over several years as foreign central banks continue to diversify away from the US dollar. This shift has also been reflected at the consumer level. US retail investors, spurred by economic uncertainty, have been buying gold bars from outlets like Costco, where supply frequently sells out almost as quickly as it arrives. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I'm completely honest. I think, you know, silver has been a big disappointment. Let's face it. I think we all expected silver to really start outperforming gold already earlier. I mean, that's a logarithmic chart, obviously. So it shows me that, you know, once such a cup and handle pattern is resolved, what does actually the handle mean? That's like a consolidation on the higher level, where basically there's, you know, bulls and bears are kind of fighting against each other, and then at the breakout, the bulls actually win. And we've seen that with gold, with really this textbook breakout, and then rising up to 2,700 within a very short time frame. So one of the core views of this year's In Gold We Trust report, the big long, is that gold already did pretty well. I mean, gold is up 25% year to date in 2025. That's pretty nice, I would say. Gold was up, let's say, 30% in basically every fiat currency last year. Or let's put it from a different point of view, most fiat currencies devalued a third against gold in just 1 year, which is pretty significant. But silver hasn't really done what it's supposed to do. Now, I think from a fundamental point of view, we're seeing, and you all know that, we're seeing this deficit now the 5th year in a row. We're seeing that industrial demand is growing at a solid pace. But what we're missing so far is like big investor demand. We haven't seen that yet. But I think it's going to happen, because at some point people will say, well, gold is already kind of too expensive for me. I want to buy the little brother of gold, which is silver. So that's going to happen at some point. So my take has been, and we analyzed that in the report, gold always goes first, and then silver, the mining stocks, and also the commodities follow. So that's kind of my cycle view going forward. I would expect silver to really start outperforming gold now big time, but we really need investor demand. The numbers you mentioned before, I mean, Bateman is buying physical gold, and the gentleman who just retired called Buffett, pretty good investment on silver back in the days. Yeah, perhaps he did it again. I don't know, but silver, not only relative to gold, you know, with the gold silver ratio at almost 100, but also in absolute terms, I think it's probably the bargain of the century or whatever. Yeah, I think it's just a steal at those price levels. I think that gold always has been a monetary asset, and we kind of forgot about that in the Western world. You know, having a look at this chart, it just shows that 3 years in a row, central banks bought more than 1,000 tons of gold. It's obviously mainly being driven by emerging markets, and I think, Andy, that's something very important that we described in last year's In Gold We Trust report called the New Gold Playbook. We said that the center of the gold world isn't in New York and in London or in Zurich anymore. It's rather in Shanghai, in Dubai, it's in Mumbai. So the majority of fiscal demand is clearly coming from emerging markets where there's a much stronger affinity for gold compared to the Western world. And now we in the Western world kind of wake up and say, okay, well, you know, there's some momentum in gold. Perhaps we should kind of reconsider that. But I think this chart, it's fascinating that central banks bought more than 1,000 tons in a row last year in absolute terms, and that was more than 100 billion US dollar. That sounds like a lot, but then on the other hand, you know, QE3, what was it, like 60 billion per month? So if you put it in perspective, I think it's still kind of a low number. Last year, Poland was actually the largest buyer. So it's not only, let's say, Asian central banks. It's also, you know, some European countries like Poland and Hungary are buying gold. So from my point of view, those numbers, which is roughly a third of annual gold production. So if you put it relative to annual gold production, that's quite staggering from my point of view. I think we have to differentiate between central bank gold demand and then private demand from emerging markets. I think, you know, if you, I was in Dubai last year, I was in Saudi Arabia this year at the Future Minerals Forum, which is now one of the largest conference, even though they started it only 4 years ago. And it's, you know, if you talk to people from the Arabic world, from China, from India, from Turkey, for them, you know, buying gold is something very natural. Why? Because they're quite used to, you know, higher inflation, to kind of rubbish currencies, to financial repression, and there's not too many alternatives to gold and perhaps real estate. So they're not living in this over-financialized world like we do in the West. So for them, buying gold is just natural. When it comes to central banks, yes, I agree. They are buying, especially the Chinese, they're owning significantly more than officially announced. Do they use the suppression? Yeah, perhaps. But then I think, you know, they just want to catch up to the amount of, let's say, central bank backing that we in the Western world have. So it's also a sign, kind of a sign of confidence, and I think, you know, just being more respected in the big global game. And I think if you want to play poker with the big guys, you have to bring some golden chips, and this is what they realize actually. But I think it's very important what you said before, Andy. It's not only the central bank buying, it's also this trend of repatriation of gold. which is very, very important. And we've got a big chapter on that topic, because it also shows that gold is becoming more important for politicians again, and they're increasingly realizing that, you know, storing that gold within the own borders is something. The implications for the monetary order. First of all, it was a consequence of the weaponization of the U.S. dollar, starting in 2022 against Russia. That's obvious. And I think the second thing that we will also discuss probably later on is this Mar-a-Lago Accord that has really become mainstream. And, you know, if Scott Bessent, for example, says that, you know, he's expecting some sort of a new Bretton Woods agreement, and that he wants to be part of that administration where something like that is happening. And when he also says that they called him a gold bug and that gold is his largest position by far, I think that's no coincidence. So the big picture is gold is really becoming quiet. There's some quiet remonetization of gold happening. I think we're you know, coming, like if you're at the music festival, yeah.
Ronald-Peter Stöferle observes that what was once a fringe notion, the reintroduction of gold into the global monetary system, is increasingly gaining mainstream consideration. As trust in U.S. monetary leadership continues to erode, particularly in the wake of unpredictable foreign and economic policies under former President Donald Trump, gold is re-emerging not just as a hedge, but as a candidate for monetary recalibration. The idea of a gold revaluation, once dismissed as unlikely, is now being viewed as a potential necessity in a shifting global order. Gold's appeal lies in its unique status as a global monetary asset free of counterparty risk. Unlike fiat currencies or financial derivatives, gold's value is not dependent on the solvency or credibility of any institution. In an environment characterized by deglobalization, rising geopolitical instability, and inflationary pressures, central banks have increased their gold purchases to safeguard national reserves against systemic risks associated with the U.S. dollar. This strategic pivot by central banks comes as the dollar faces mounting skepticism. The aggressive use of the dollar as a political weapon in trade disputes, particularly during the Trump administration, accelerated the global search for alternatives. As a result, gold has become the preferred neutral asset, increasingly viewed as a form of monetary insurance rather than just a commodity. Let's get back to the interview.
The major structural and central problem that we have in this world, the lack of a neutral monetary reserve asset. And the interesting thing is, I think that people in this administration are actually aware of that. You know, Stephen Mirren, he wrote a brilliant paper. I commented on that on Twitter. I really read it, I think 4 times, and highlighted so many different points that are crucial to understand. So there's already the playbook is already in place. Now, the big question is, can such a I think Trump is very open that he wants it, that he needs a weaker dollar. The big question is, can such a controlled devaluation, is it gonna work out? That's really central for me. And we write in the report, it's like asking for warm ice lollies. So it's kind of, you know, it defies economic physics, if you want. So you know, there's many ways, or not many ways, but there's a few ways to actually solve the Triffin dilemma. You need a neutral monetary reserve asset. You can have, for example, to balance those structural deficits, those global imbalances that are driven by our current monetary system, and those twin deficits, SDRs. Could be used, and you know, the IMF has them in place. And a friend of mine said, what was it, like, money used to be IOU gold, then it became 1971 IOU nothing, and then SDRs are who owes you nothing. So I think nobody on this planet really 100% SDRs. So therefore, I'm not really sure if that's going to be the solution. Of course, John Maynard Keynes, during the Bretton Woods conference and afterwards, he talked about the Bancor, for example. This is something that I think many things are pointing into that direction. But gold, I think, fits the purposes the very best. Bitcoin could do it as well, but Bitcoin is not globally really accepted. It's not liquid enough. We don't have enough monetary history when it comes to Bitcoin. So I think there will be ways let's put it that way. The only way to really solve Trippin's dilemma would be introducing a neutral monetary reserve, and that can only be gold. Now, is this Mar-a-Lago conference really going to happen? I don't know, because if we look back to, for example, the Plaza Accord and the Louvre Accord, this was a time of global cooperation, and they actually sat together and discussed and came up with the solution. Now, it's different, and I can tell you, being based in Europe, trust in the reliability of the United States, trust capital that has been built over actually decades. So I'm not 100% sure if that's going to happen, but obviously those sticks and carrots that are being discussed, they're pretty powerful. And I think it's also no coincidence that if you remember the first term of Donald Trump, where did he go first? What was his big trip first? Do you remember? It was actually, yeah, it was to Saudi Arabia, and now it's it's pretty much the same. So I think Donald Trump and his team, they understand the consequences of our monetary system. They understand the importance of the petrodollar, and they need the support actually by the Saudis, and I think also to some degree by the Europeans and even the Chinese. So it's let's put it that way, and those things like revaluing gold coming back into our monetary system, auditing Fort Knox, those were like topics that were only discussed in the gold scene, yeah. But now they are becoming mainstream topics, and this is quite important, because it's telling me that gold is really, as I've said before, we're on the main stage now. Yeah, very, very hard monetary assets with a very high stock to flow ratio. But what I really like about that is that in the Bitcoin community, there's young folks now, studying monetary history. Why do we have inflation? Where is it coming from? What are like the what is sound money? They discovered the Austrian School of Economics, and I think that's a very, very important discussion. So therefore, I think all those those discussions and arguments between those two camps, I think it's ridiculous, because the enemy of gold, it isn't Bitcoin, and it's also not equities from my point of view. It's rather bonds, and this is where the potential, actually the buying potential, will come from the bond market, where there's massive turmoil at the moment. Just have a look at yields spiking in not only in the US and in Europe, but especially in Japan.
Gold imports through Hong Kong have surged dramatically, reflecting a broader movement by Eastern central banks to bolster their physical reserves amid rising global uncertainties. This significant uptick aligns with a strategic push toward gold repatriation and diversification, away from traditional reliance on the US dollar. As gold increasingly assumes the role of a geopolitical asset and monetary safeguard, its sustained rally signals more profound shifts in the international financial order. This trend highlights growing concerns about economic stability and the quest for reliable stores of value in an unpredictable world. Could this surge in gold accumulation by emerging powers mark a fundamental reshaping of global monetary influence, potentially leading to gold reclaiming its central role in the financial system? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.